Time now for Real Estate Update. With Usha Chandra, of GlobeNet Realty, real estate is our world.
Now we're standing here face to face.
Well, ladies and gentlemen, once again, welcome to this very exciting segment of Weekly Real Estate with Usha Chandra of GlobeNet Realty. With that, let's welcome to the...
Thank you so much for having me on the show, Umesh, and Australian Indian Radio.
And thank you so much for being on the show. It's always a pleasure to have you in the show. So, people always say that whatever goes up must come down. But today, what we are going to be talking about, what went down is coming up. Yes, you must have all guessed it. We're talking about that historical announcement of the interest rate rise. So, could you explain to us why and how this has come about and what would it mean for all the normal householders?
Yes, very, very devastating news for a lot of householders. Higher costs for essentials and debt double whammy for most of the households. As universally expected, the RBA made the decision to raise the cash rate at their June meeting. However, the 50 basis point was higher than expected. This means the people were expecting a little bit lower basis point, but 50 basis point was a really large higher hike. I mean, that doesn't mean that the interest rate has got that high. In 22 years, the interest rate has got first time that high, but it's not higher than we have been paying previously, 18%, 20%. All that sort of interest rate. I mean, interest rate is quite reasonable at the moment, but within 22 years, after 22 years, this hike has come, and it's a shock to a lot of homeowners and a lot of average families in Australia. The latest move takes to overnight cash rate of 0.85%, with underlying inflation moving sharply higher to be 3.5% over the year. The RBA's heavy lifting on cash rate still has some way to go, with interest rates likely to consistently rise through the second half of the year and into 2023. So a lot of talk about interest rate, and now we have seen that it has gone by 50 base point, which was not expected, that sort of high rate.
Right, so that rate, which is quite high, so that 50 basis point is one of the highest single rise in the last 22 years. And as you rightfully mentioned, that it does not mean that the interest rate is at a record high. It is the basis point increase in the last 22 years, because it was up till now, it was always going down, and now this is the single biggest increase. Well, with that, there has been talks about the cash rates and the mortgage rates and the interest. So overall, what will it look like with the cash rate going up, and what would it mean on mortgages?
Yes, looking with the cash rate up, it's highly likely very well mortgage rates will rise by the same or similar amount over the coming weeks. Taking the average variable interest rate for a new owner occupier loan around 3.16%, together with the 25 base points increase handed down last month. The cumulative 75 basis point lift in mortgage rates will add approximately $200 per month in additional repayments on a $500,000 mortgage, compared with the mortgage rates in April. Let's have a quick look at this report.
Crunch time. Households on the red line.
Rate expectations, a nervous way.
It's now not a matter of if, but by how much.
Energy prices soaring.
Expected to add further cost of living stress to struggling households.
Australians expected higher interest rates today, but that doesn't make this news any less difficult.
It is hard to remember a Treasurer who has had to deliver quite such a sombre message from his first day in the job as Jim Chalmers. And if anybody had missed that message in the past 2 weeks, they certainly couldn't miss it today.
High and rising inflation, rising interest rates, falling real wages, at a time when our ability to respond to these challenges is constrained by the fact that the budget is absolutely heaving with Liberal debt. Now, it is within our grasp, it is within our reach to strengthen our economy and to have a better future, but first we need to navigate together this high and rising inflation and the interest rate rises that accompany it.
And just how hard that navigation will be was made clear to Australians at 2:30 this afternoon, when the Reserve Bank announced it was pushing interest rates a 0.5 percentage point higher on top of the 0.25 percentage point it announced last month. We had been warned that there would be more interest rate hikes to come this year.
The country, starting in Sydney, there'll be 836 auctions and there'll be another 148 auctions around New South Wales this weekend. Melbourne tops the list with 979 auctions. There'll be another 52 around Victoria. Brisbane will have 151 auctions, with the rest of Queensland having another 135 auctions. In Adelaide, there'll be 161 auctions this weekend, and in Canberra, there'll be 107 auctions. Moving on to the most viewed properties going to auction this week, and Victoria has dominated the list. First up is 7 Kent Street, Hawthorn, an inner city house that boasts 3 bedrooms, 2 bathrooms and a 2-car garage. It also features a glass-topped underground wine cellar, hydronic floor heating, and is priced at $1.8 to $1.98 million. 28 Webster Street, Camberwell comes in second. It's got 5 bedrooms and 5 bathrooms on 732 square metres. It features a heated pool and a spa, as well as a Hamptons-inspired stone kitchen. Has a price guide of $2.9 to $3.19 million. In third, we have 15 Regina Street, Wheelers Hill, which has 4 bedrooms, 2 bathrooms and sits on 654 square metres. It has a price guide of $1.35 to $1.48 million. Next, we have 103 Morris Road, Upwey, which we featured a few weeks ago. It's a fixer-upper and priced between $590,000 and $650,000. Lastly, 416 Ringwood Warrandyte Road, Warrandyte rounds out our list with a price guide of $1.24 to $1.36 million. This week's top listing is literally divine. 124 Napier Street, Fitzroy in Victoria. It's a historic bluestone church that's been expertly renovated under architect's supervision into a home, featuring 443 square metres of living space. It comes with 3 bedrooms, 3 bathrooms and 1 car spot. The second floor features a spacious open-plan living layout where the kitchen, dining, loft and sunken lounge area seamlessly integrate into one. The bedrooms are lined with wood and the master has an ensuite and adjoining laundry. The property also comes with a lift and a large north-facing terrace, which can be accessed directly from the living room. And look, there's lots of beautiful stained glass windows as well. But Divine Living doesn't come cheap. It has a price guide of $5.7 to $6.2 million. Well, joining me now is Eleanor Cray, Senior Economist with REA Group. Eleanor, thank you for your time. Look, how much is the property market starting to slow down at the moment?
We have seen that, I guess, there's been a quite noticeable and pretty quick shift in the market as we've cooled off the exceptional pace of price growth and activity that we saw throughout much of last year. You know, last year was very much a seller's market, overwhelmingly so. Now we've seen this year a lot more choice coming to the market's slowing, prices beginning to fall in some areas, and in fact in the capital cities, Sydney and Melbourne, we're actually seeing that prices are falling at the fastest pace since 1989. But it's unsurprising, I guess, when you put that in the context of what we saw last year, which was housing prices rising Australia-wide at the fastest pace in more than, or third fastest pace in more than 140 years.
So sales and property prices starting to cool off, but the rental market seems to be going from strength to strength. What's really driving up competition in that rental market?
Yeah, you're exactly right. In the rental market, competition is really heating up at the moment, and particularly in the capital cities. We're seeing that as cities return to life, demand to rent is really returning to the cities and tapering off somewhat in the regions. And what we're seeing driving this is not only that uplift in demand to rent in the capital cities, but also a very constrained availability of supply of rentals. So it's very, very tough for a would-be tenant to find a vacant rental at the moment. And actually, if we look at the total supply of rental listings available on realestate.com.au, that's fallen almost a third of pre-pandemic levels. So certainly, not much choice out there for renters and a lot of competition.
Yeah, rents were obviously falling pretty sharply during 2020 at the height of the pandemic. Is it fair to say that rents are now rising pretty strongly again?
Yeah, certainly. I mean, we're seeing that on a national basis, advertised rents have risen 7% in the last 12 months. There are places where that's a little bit stronger, Hobart, Brisbane. When you look at Sydney and Melbourne, those annual increases in rents aren't quite so much. But if you look over the last few months or so, we've seen that demand to rent, particularly in the inner cities of Sydney and Melbourne, has soared. Looking at places like Parramatta, inner city Melbourne, potential renters per listing has increased. It's actually more than doubled in some of those regions. So we are seeing that those rental price pressures, although they're not quite as strong when we compare to this time last year, they've certainly picked up in the last few months, and we do expect that they are going to continue to pick up.
International borders obviously been open now for a few months, and we're seeing more and more people starting to migrate to Australia again. So is that putting further pressure and competition into the rental market as well?
Yeah, I mean, that's certainly one of the factors that I think we're seeing in terms of demand really returning to the capital cities, particularly Sydney, Melbourne and Brisbane. And we're also seeing that demand has really surged in the unit market. So it's another factor, I guess, that we've seen not only with the borders having reopened, but also as cities return to life. Apartment living is maybe back in vogue for some. I think the relative attractiveness of living in an apartment was seriously impacted, certainly in Sydney and Melbourne throughout much of last year with lockdowns and restrictions, but we're seeing that picture shift quite dramatically. So the international borders having reopened, adding to rental demand and competition, and also the return to life of cities really adding to rental demand, particularly in the apartment market.
Well, Eleanor Cray, Senior Economist at REA Group, thanks for coming on the program today.
Around the country at what happened in property markets over the weekend, and nationally there were 1,278 auctions, a clearance rate of just 49%. You get that? Across the country, 51% of homes were not sold. Now in Sydney there were 467 auctions. The clearance rate here you can see 44.8%, but there were a further 1,194 properties sold privately. Melbourne had 351 auctions, a clearance rate here 55.8%. And another 932 homes sold privately. Brisbane had 84 auctions, the clearance rate just 32.1%, and another 985 homes sold through private treaty. In Adelaide, 63 auctions, the clearance rate 68.3%, 222 homes sold privately, and in Canberra, 59 auctions, a clearance rate 62.7%. plus an extra 68 homes sold privately. To explain all that, joining me, Angus Moore, economist with REA Group. Angus, that tells the story. We're used to 80%, 90% auction clearance rates over the past 18 months or more. Now, back close to 50%. Is that reality, or is that simply people being spooked by higher interest rates?
Yeah, we're certainly seeing a slowdown in market conditions more broadly, and part of that's the fact that we're coming into winter. Auction markets are quieter in winter. People don't like listing in winter. It's colder. It's not as nice time to do an open home. That said, things are still quite busy for winter. We still had quite a high sales volume through much of last month. So things are slowing, but maybe not as much as we might normally expect for winter. But when we look at broader conditions, we have seen things like measures of buyer demand come off. It's taking longer to sell a home. clearance rates are down. So we are seeing the impact of higher interest rates, and we're seeing that in prices as well.
Okay, but the boom that we've been through was shown up in the census, in the national census. First home buyers, the number of homes built in Australia, which also comes to population growth and population migration throughout Australia.
Yeah, exactly. I mean, we're talking what I love if we're talking census, but one of the things that really stuck out in the most recent census, for me at least, was that we built a lot of homes in the past 5 years. You know, the census is a census of dwellings as well as of people, and over the 5 years between 2016 and 2021, number of occupied homes grew 12%. To put that in context, between 2006 and 2011, it was just 3%. Over that whole 5 years, just 3%. And 2011 to 2016 was only 7%. So we built more homes in the last 5 years than we did in the prior decade combined.
So tell me this. The Reserve Bank raised interest rates 0.5%. That takes total interest rate rises 1.35% in the last 3 months. Given what is happening in the housing markets now, do you think the Reserve Bank might be a little satisfied with its rate movements so far and the way it's stopped activity in the housing markets?
It's certainly having an impact on housing markets. We're seeing that in prices. I'm sure we'll see it in building activity. We have data from the ABS coming out this week on building activity that I think will start to show some of that. And, you know, we are coming off a very rapid period of construction over the past 2 years in detached homes, partly driven by low interest rates, partly driven by home builder, and that's starting to come off now. So I think the RBA will be happy that what's happening in the housing market is having the desired effect. Of course, it's not the only channel that monetary policy matters through, and what will ultimately determine whether they're happy or not is whether inflation's getting back under 3%.
And that's the thing, because that will be perhaps the signal for them to cut interest rates or to hold interest rates for longer. You just wonder when they're going to start that moment of waiting and looking at the Australian economy.
Yeah, for sure. I think it'll be interesting to see. We'll have updated forecasts when the RBA meets next. Be interesting to see how those are looking, what they're thinking for unemployment, what they're thinking for inflation, because that'll really set the tone for what happens over the next 6 to 12 months with the RBA.
Angus Moore, always good to have you in the program, and many thanks for your time today.
Absolute pleasure, Ross.
GlobeNet Realty. GlobeNet Realty has been the longest established, trusted and respected agency in its trade area. Usha Chandra, Director of GlobeNet Realty, provides honest and ethical service to her customers. If you are thinking of investing in Brisbane real estate market, or if you are seeking professional property management, then you should contact Usha Chandra today on landline 3865 4466 or mobile 0419 775 416. And for further updates, log on to our website www.globenetralty.com.au. GlobeNet Realty is your own local real estate agency. Situated at Shop 52281 Sandgate Road, Boondall. GlobeNet Realty. Real estate is our world.